Is XRP secretly setting up for the ultimate market plot twist? Imagine walking past a completely quiet, empty store. The windows are dark, there are no long lines outside, and the cash register isn't ringing. From the sidewalk, you'd assume that business is completely dead. But what if you went around the back alley and discovered a massive convoy of delivery trucks loading up crates of inventory every single night? That is exactly what is happening with XRP right now. On the surface, the price looks completely stuck. It's boring, it's flat, and retail investors are losing patience. But behind the scenes, a dramatic shift is taking place that has caught the attention of major analysts. According to our news right here, expert says XRP is 100% undervalued right now. All right? The trading group Cheeky Crypto recently published a fascinating breakdown on X, making a very bold claim that XRP is 100% undervalued right now. They aren't looking at empty social media hype or wild price guesses. Instead, they are tracking a massive divergence between silent retail exchanges and booming institutional trading desks. So in this video, we are going to look at the hard data, find out where the retail money went, and explore why the big players are quietly positioning themselves. Right? But before that, before we continue, let's check XRP's current price right now, which is now at around 1.11. It's 1.1117. And as we can see here on our daily chart time frame, it seems that XRP's price has no plan of stopping from going downwards toward our major support right here at 1.0169, or exactly at here, exactly at a price level of $1. Right? Now let's go back to the news, and let's start with our very first question about why has public trading liquidity crashed to a 6-year low, right? To understand why the price feels so stagnant, we have to look at the market's lifeblood, and that's the liquidity. Cheeky Crypto highlighted a staggering drop in public order books. In fact, XRP's trading depth on public retail platforms has plunged to its lowest level since January 2020. Right? To put this in perspective, they pointed out Binance 30-day liquidity index for XRP, which has dropped all the way down to a tiny 0.043. Right? Tiny 0.043. During that active market years between 2022 and 2024, that exact same metric consistently sat above 3 and often spiked past 4 during high volume rallies. This means the normal buy and sell orders that usually absorb large trades have practically vanished from public view. So, in my opinion, as a long-time market observer, this liquidity drought tells me two very important things. First, the casual retail traders who used to day trade XRP out of pure boredom have completely left the room. Second, when public order books are this thin, the market becomes highly sensitive. It is like an empty room where even a small whisper creates a massive echo. Because there are so few orders sitting on the books, a sudden influx of buying volume could move the price violently compared to normal conditions. The calm we see right now is a structural illusion. Right? Now, does a 47% loss for average traders mean the bottom is in? So let's highlight this part. The next layer of data comes from the on-chain analytics platform sentiment, and it reveals a massive amount of investor pain. When you look at the 30-day market value to realized value ratio, or the MVRV, it shows that the average active XRP trader over the past month is sitting on losses of roughly 47%. This deeply negative reading is something we haven't seen since December 2020. Historically, whenever the MVRV ratio drops this low, it means the speculative excess has been completely scraped out of the market. The short-term speculators who bought in hoping for a quick dollar have capitulated and walked away. So in my view as a market observer, this extreme level of trader pain is actually a textbook counter indicator. Markets do not bottom out when everyone is happy and celebrating. They bottom out when the sentiment is completely on the floor and the average holder feels defeated. This 47% loss metric tells me that the weak hands have been thoroughly shaken out. The people left holding XRP today are the hardcore believers and long-term strategists who want panic sell at these levels. This creates a very stable foundation because the selling pressure is exhausted. All right? Now, where is the big money hiding if it's not in public exchanges? So, if retail traders are taking losses and public order books are completely empty, why is cheeky crypto saying the asset is severely undervalued? The answer lies entirely in the regulated derivatives market. While the public spot markets, while the public spot market look like a ghost town, institutional activity is moving in the exact opposite direction. The data shows a massive boom in CME crypto futures trading. We are looking at over $62 billion. All right, $62 billion in notional trading volume alongside a massive 46% year-over-year increase in average daily crypto volume during this 2026. Big professional investors do not log into public crypto apps to buy millions of dollars worth of tokens. They utilize over-the-counter desk and regulated futures to accumulate their positions without disrupting the retail spot price. Right? Now, in my opinion, this is the most crucial part of the entire puzzle for a serious market observer. The institutions are deliberately keeping their footprints off the public exchanges. They are loading up their crates through the back door while the front door stays quiet. This explains the massive disconnect we are experiencing. The price remains stable because the institutional buying power is insulated from the retail order books, allowing them to accumulate at an undervalued rate before the rest of the world wakes up. All right. So overall, when we are going to piece all these clues together, we are a very unique picture begins to form. We are currently witnessing a rare and historical combination of three market forces hitting at the exact same time, and that's multi-year lows in public liquidity, maximum financial pain for short-term retail traders, and a massive 46% surge in professional institutional interest behind the scenes. XRP is essentially operating on two completely different stages right now. The public stage is quiet, dark, and filled with pessimistic retail sentiment. But the private institutional stage is busier than it has never been. So, the ultimate takeaway from cheeky crypto's analysis here is that public price charts do not always tell the full story of an asset's true value. XRP is structurally 100% undervalued because the public order books are being starved of liquidity while the actual macro adoption by large-scale institutions is scaling up quietly in the background. This environment cannot last forever. When public liquidity is this low and the weak hands have already sold out, the stage is set for an extreme reaction the moment a major fundamental catalyst enters the public spot market. The big players are clearly preparing for something significant behind the scenes. And as a market observer, the data tells me that watching what the institutions do is always infinitely more valuable than listening to the retail noise. Right? And this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this recommended video right here.